Hey everybody, hey traders, Chris Pulver here, just after 1 p.m. Eastern Time on Monday the 23rd. Happy Monday. We are kicking off. We will see if there's going to be a Santa rally this year. I think the Fed put a bit of a sour taste in the holiday spirit with that sell-off that we saw from Wednesday. Basically, the market anticipated, 4+ cuts for 2025. The Fed went ahead and made their third cut of the year, which totals 100 basis points since September 18th. But the problem is now the Fed says we're kind of done, and the market quickly reacted to what was maybe going to be 4 or 5 cuts for 2025 to maybe 1 to 2 cuts for 2025. And there was also, we're sitting here with 57 all-time highs in the S&P, and it's been a heck of a year. It's been one of the top performing years in an election year ever. It's been one of the, I think, top 5 or top 10 all time in the S&P, especially with all-time highs. We had the S&P up over 20%, the Nasdaq over 20+%. We've seen rips in gold and rips in Bitcoin and risk appetite and all sorts of stuff. And it actually was pretty good timing for just a correction. Now, I wonder if the market, with this 10-day chop fest we saw prior to FOMC, if this area is going to offer some Santa rally resistance. So perhaps we come right up into the start of this FOMC candle. Is that a rejection point where the market fades off of that, or is the market able to climb back up, give the bulls the upper hand, and maybe within the next 2 weeks of trading, or even into the first part of January, will we continue to see more inflows coming back up to retest highs again? If so, then it may not be a 58th all-time high because we're going to be possibly into 2025's trading year. But if we do carve out another all-time high, then this market just used the FOMC as a 4.5 to 5.5% sell-off. That'd be 4.5% or so in the SPY, 5.5% on the QQQ. We had about a 6 to 7% pullback on the Dow and almost an 11% pullback on the Russell, all within the last month or so. Anyway, do we get to all-time highs, let's say, in the next 30 days? It is possible the Santa rally might help. The market sold off aggressively enough and fast enough that perhaps that little bottom through the PCE Friday was just kind of testing this level. Is this a topping pattern? Do we have this low, this low? Does this actually matter? Does this market give us some type of head and shoulders trade? That's why I'm saying that the head and shoulders, or this FOMC resistance zone, is going to be really important, because if we come back up to that and start to show some rejection, become a very quick self-fulfilling pattern where we'd end up breaking the lows and heading back down to a symmetrical correction, or even in a typical head and shoulders where we start to see the market kind of break this level, high, low, and then the neckline, lower high to lower low. So for me, I'm looking at about 280 plus bars on the SPY. If we are lucky, I think we find a way to just kind of get back to the all-time highs, but we don't necessarily blow through them. I think carving out all-time highs now is going to be relatively difficult. The upside potential to me is pretty limited. That doesn't mean I'm bearish. It just means that I think this market is going to struggle to make really big jumps to the upside, and it's going to have to find a way to justify why we would be still stretching higher and higher and higher and having these valuations continue to grow. So, what would almost be easier, and this is just my opinion, but what would almost be easier would be if this market from this sell-off pulls back up. We have no real holiday trading, and people can just enjoy the holidays, not have anything crazy happen. And then we have an early 2025 correction. And what would that be? Maybe more on the Fed, maybe more on the debt ceiling. Maybe Trump leads right out of his inauguration with tariffs, or some type of deportation bill. I have no idea. But anything that would kind of scare the sentiment right now could potentially lead to more quick and abrupt downside moves. I look at this as an opportunity to still be technically buying the market. I mean, I've been waiting for, just like we had back in August here, that was a chance to buy the dip, just because, yes, it was a bit of a panic move, but it was the only discount we had all year. That little hiccup in April was like a 4 to 5% correction. There's just a good opportunity in August to buy and then see where you position by the end of the year. And I was pretty bullish going into October, November, December this year. Now that we've hit all-time highs, I'm just a little cautious on, can we continue to climb the wall of worry? If the market does, awesome. I'll be happy, like everyone else, that we're still enjoying some positive flows to the upside, and the melt up and the climbing the wall of worry continue. But I'm just a little cautious of how aggressive this thing gets over the next couple of weeks. And if there's an opportunity to come down a little bit lower, kind of make good on this bar count, I'd be happy with that. I think the toughest trading ahead would be something like this. We come up to the recent highs, we fall back down to the recent lows, we come back up to the all-time highs, we come back down again, and we have some type of like broadening pattern that starts to look a little bit wider. The market's had this really nice 2-year trend, and we start to kind of round out the top. That would be a bit more of a concerning pattern, because eventually a pattern like that either goes sideways for longer and it just bores traders to death, or it worries them depending on how deep the correction is, which right now 4 to 5% is not a big correction. I'd be way more concerned if we had a 10 to 15% correction. Then we're talking, the panic is happening, everyone's selling and rushing to the exits. Meanwhile, I'm hoping that like a 10 to 15% discount would be a pretty bargain spot to scoop up some more assets. Okay, but I think the difficult trading would be if we're choppy and sideways with very light volatility, right? But that's why I'm here to navigate the markets and figure out what's best. So for the next couple of weeks with limited trading hours, or not trading hours, but markets are closed on Christmas Day and New Year's Day. That's 2 days of the next 2 weeks. And if traders want to go enjoy their time and holidays for the next 2 weeks, then we might see some very light volume trading. I'm not trying to fight this stuff. I'm just trying to stay out of the way. A lot of my option trades are out 30, 45, 60 days. I was looking at a trade on a couple of different assets today. I mean, MicroStrategy looks pretty promising, but I don't want to be trading a lot of peripherals. I've got Bitcoin. I have some MicroStrategy. I have some Coinbase. I have some Ethereum. Um, uh, and that's about it. I mean, I don't want to go all in and go heavy. I like the idea of income, but Q1 is going to be an interesting window. Is the market going to show us good stuff? Is the market going to still maintain this high level of sentiment and optimism, or is there a little concern? I don't know. But we'll find out. So SPY just off the all-time highs, fighting back a little bit since the FOMC kind of spoiled the holiday plans. The Nasdaq very similar, very aggressive sell-off, came back into the this is be a 50-period moving average. SPY same thing, just a little bit lower than the 50-period moving average, just shy of my 100 moving average. I've been watching and kind of patiently waiting for a 144 to 200 EMA to offer up some dynamic support for me to start adding more positions. Same thing is true on the Nasdaq. Kind of this 100 to 144 window here. The Dow has already made some decent comeback or pullback trades, but again, I look at this. We have a low and a low. Now, this came all the way back to touch and test and fill the entire election gap. So, is this a topping pattern on the Dow? We can keep an eye on this one, but if we pull back again and it fails to take out the all-time highs, this Dow might be putting in a correction. It's very possible. So let's keep an eye on that. The bar count on the Dow also stretching out, just like the SPY. We have stretched out to well over 200 plus bars. I think we're creeping up closer to 300 bars, and that is 286 bars. So I could see the Dow lower high to lower low, finding some opportunity to buy. I'm saying here 9 to 12% correction in the Dow. I've had that on my chart. If we offer up this area between this low and just above this August low, I would scoop up some down there. But I'd like to see if we have a corrective pattern, high, low, lower low, before I start looking to position for it. Okay. So, this could also go all the way back up and back down. And like I said, beware of those tricky little broadening patterns, because they don't necessarily go higher or go lower, but they find a way to, hit equilibrium. And eventually they end up breaking. And if they break to the upside, there's more to go. If they break to the downside, there's more to go. And they can be very tricky patterns to measure, but also tricky patterns when traders are constantly looking for, they're breaking the high, we're going higher. They're breaking the lows, we're going lower. And yet it turns and does the exact opposite. So Dow's had a decent correction. I'm wondering if we have a lower high to lower low, starting to position my Dow positions there. The Russell, probably going to stay out of the Russell for right now. It's still somewhat attractive with this 200 moving average offering some support. I just don't love it. I don't love it. I think that right now with that hawkish tone that the Fed has taken, we are seeing basically restrictive monetary policy. The Fed is kind of done cutting until they deem that inflation is going to be better under control. The big issue I have with the Fed right now and what the bond market is telling us, if you take a look at the 10-year yield, the 10-year yield continues to drift higher. Now, this is a pretty fascinating occurrence here for the last couple of months. Since the Fed cut rates September 18th, the 10-year bond yield, okay, has gone up 98 basis points, and the Fed has cut by 100 basis points. So the Fed is cutting and the bond yield is rallying. almost tick for tick or basis point for basis point the exact opposite. That is not a good sign because that is telling me that for anything that is basically financing in a 5, 10, 15, 30-year window, if this 10-year yield goes higher, that is going to basically choke out growth. That is going to freeze the consumer where nobody's buying auto, nobody's buying houses, nobody's doing anything that's going to cost money or refinancing at higher levels. And it's going to be tough to grow. And same thing is true for business. If you can't restructure debt at affordable rates or can't restructure debt at cheaper rates, it's going to be difficult to grow. And, we have been an economy that has flourished on debt leverage. And the higher this 10-year yield goes, I think the harder and harder that gets. So this is a concern. This is just one chart that I'm watching. We could have this maybe stall out a little bit and maybe get some volatility in here as well. I don't know. But there are some big names throwing their hats in the ring that are short bonds and long yields, and they are looking for something at 5+%. If that is the case, we are going to see an interesting development on where the auto market's at, where our houses at. We essentially have frozen the housing market since 2022 with the Fed hiking rates, and then we have on top of that just making it a very difficult and the most unaffordable housing market that the U.S. has ever seen. When it comes to the average home price and the average household income, it now takes more money than ever before. On top of that, you got higher homeowners insurance. All these things make it for a very unaffordable housing market. So watching the 10-year yield very carefully. Let's talk some other indexes here. China just taking a quick spot check. HSI is hanging in there. This is probably one of my plays for 2025. It was a play through 2024. I had some nice profits in September. I managed to get out of some of these trades. So my FXI trade, I closed out on this little pop up here towards $33. My KWeb trade, I got out of here around this $34. JD, I'm still in with a roll down level. I'm rolled all the way down to like 37 to $38 for covered calls. That would still give me a nice little income trade. I've been aggressively lowering my costs from like $44 all the way down to like $36 or $37 now. And I'm going to keep doing it. I'm just going to keep, playing the options game and lower my cost basis. SCHD, these are Schwab plays. These are basically ETFs. This is one on large cap growth, which is still hanging in there. That's a lot of exposure to Mag 7. I think this actual ETF has either 100 plus symbols or 200 plus symbols, but a lot of it is in Mag 7. And it's not a bad thing, but it's essentially a way to be a little bit more diversified than just the Mag 7, but essentially it's the Mag 7. And growth wise, for the last year to date is up 38.65%. I mean, you could argue that a lot of that's Mag 7, right? 145% in the last 5 years. That's pretty impressive. Now, SCHD, this is a dividend play. For the last year, this thing's pretty much given most of it back. It's up 7.86%. Now, it still has about a 3.5% dividend. There's 3.64. For the last 5 years, up 40+%. Plus, you've got a compounding dividend at nearly 4%. So it's not too bad, but big difference as far as performance, whether you have Mag 7 exposure or you're playing more blue chip and dividends. But I'm interested. I have some exposure on SCHD and SCHG. I'm also watching some interesting setups here. This is the S&P 500 stocks that are below or above the 50-day moving average. And I'm going to use this as a potential kind of a contrarian signal. If we start to see that the 50-day averages where it's like every stock, 90+%, this would be only, 11% of stocks are above the 50-day. Well, to me, that shows, similar levels we've seen as a buying opportunity when we had, 11% of stocks above the 50-day back in October 2023. That was a really nice Q4 bottom, right? November was the same thing. We had a big follow through in November. How about over here in 2022? We had a bottom in September, okay, and then a rally in October. You can see that this was a pretty good indicator to show that if everything is so beat up and so hated, there's a good chance to buy the dip. And it's kind of a universal trade, which to me, I look at this as if I want to buy the index, this is a good way to kind of get the index at a bargain, right? So we're not quite there yet. Obviously, this can pull back a little bit higher, but if we do flush back down and give myself a nice little kind of contrarian signal where it's like, only 10% of stocks or 11% of stocks are above the 50-day, I'm somewhat interested in trying to scoop up some discounted stocks, right? And I can do that broader market with, something like RSP. I can do that with just the general market like SPY. But either way, I'm going to see if I can use an index or a signal like this, as well as the NASDAQ. Here's the NASDAQ with the 50-day, same type of thing. right? Very similar where October 2023 bottoms, we were back down to this 11, 12% back into 2022, same type of thing, back into single digits. So I'll watch those pretty carefully. Let's talk some other symbols before I go on today's video. Did the major indexes. Let's talk gold, silver, Bitcoin. Let's talk dollar. I'm currently long dollar CAD and I'm currently long dollar Swiss. Those trades are working out really nicely. I'm only about, oh, fudge, 44.75, 40. Okay, I've got about 100 pips more to rip on the dollar CAD to close me out for some profit. I hope we can get there through the holidays. And then dollar Swiss. This one's looking pretty good. I'm bullish on this one and have been for a while now. But built up a lot of positions on dollar Swiss trying to get to 9,200. We could still make our way into this 96 area, but I'd be pretty happy taking some profit at 92. What would be even better would be if we hit 92, come all the way back down to lows, and we just have a massive range to trade. So would I want to sell that? Probably not if it's negative swap, but would I want to buy this? Yep, for positive swap. So if I get the trade here, I've been in this trade since 2022. I know that seems crazy to be in a Forex trade for 2 years, but that's a lot of what I do in the Forex market, which is kind of investing and using very small trade sizes and going out a bigger picture to target my big areas. And so I was buying these lows, I was adding on trendline breaks, and I've been doing the same thing here, buying lows and adding on squeezes and trendline breaks and then stacking these orders up. So I have over 20 plus positions running on this currency pair, and I'm trying to get back up to 92 because if I get to 92, every position I'm in is positive. If I want to get really greedy, then I'm going to try to double that move because this could be a double bottom. This could be the low, and this could be a center high, and we could, in fact, double that. But because I've got a lot of positions in, this would be good enough. I'll take my profit there and move on. But dollar CAD, dollar Swiss looking pretty good. DXY, I'm watching this carefully. I'm telling traders right now, like, don't fight the dollar. I think that the dollar, because we made a big run and took out this high, to me, this is what looks to be a bit of a real deal move where the dollar is still going to maintain strength. And if we have some chop in here, that's fine. But right now, the Fed is essentially pausing while other central banks have been cutting rates. Central banks might also pause to go along with the Fed. Other central banks might continue to cut. So if the Fed stays around, 4.25, 4.5%, and we don't see a Fed cut again until like middle of 2025, does the Bank of England cut more? Or cut it all? Does the ECB cut for the European Central Bank? How about the Bank of Canada, who's cut 1.75% in the last couple of years? That's an aggressively dovish central bank. What about the Bank of Japan? Will they, sit at 0.25 forever? Are they going to change their rates as well? Either way, I don't know if the dollar. I mean, we're kind of at this. There's a high to low swing. We're right back in the middle of all this. Okay, well, that's a chop fest. I mean, I don't know where the direction is outside of I like this squeeze and a kind of a bear trap here in September. I like that squeeze to the upside. What I'm curious of is if the dollar continues just to gain strength and hit these highs, and I would say, man, I'm super excited about a chance to sell the dollar. But could be that we have more dollar strength and stay with your directions and don't fight the dollar right now. But if we continue to see additional flows with strength or strength in the dollar, I think that's fine if you're following it, but just be careful that eventually I think we're gonna have a fantastic short trade on the dollar. It might be, later 2025, might be the end of the year in 2020, it might be, 2026. I don't know. But if it comes up to this level that we haven't seen since 2022, I'm probably looking to have a resistance area to watch for confirmation short. U.S. oil, it's the make or break. I think, in my opinion, and the inflation story is going to be all about oil. And I know maybe not a lot of people are seeing that because we've had CPI go up and PPI go up and core PCE go up. But oil to me is, if inflation's going to be under control, we're probably going to have to see either oil prices stay this low and almost, just choppy, and I'm not going to say untradeable, but really choppy. Like there's no direction. Okay. Or we start to see that we get a break. If oil prices drop lower, that's probably helpful for inflation. I don't know what that looks like from the OPEC side of things. I don't know what that looks like from geopolitical risk side of things, but it would certainly help the U.S. inflation story if energy prices are going down, as opposed to if energy prices are going up. That makes the inflation story way worse in the U.S. versus way better, right? But I don't see oil doing anything for the last couple of months, and I'm not sitting here saying that oil's got to go down, it's got to go up. I don't know what it's going to do. To me, it's just wait and see. And the volatility is not great enough for me to justify like taking strangles, and I could trade some futures trades on CL. I'm not doing that. I'm just kind of waiting out to see where does oil want to go, right? I don't know. Natural gas still going higher. I'm not chasing this thing. I did not get the opportunity I wanted on natural gas to buy it at this right shoulder area. I was looking to see if we came back down to retest. We didn't, and so it's off and running. Now, to me, this is a pretty good looking trade. Left shoulder, head to neckline, right shoulder. Breaking this, we should have some movement back up into that area, maybe $4.50 or so. And then nat gas can do whatever it wants. But it ran away from me. I didn't get a chance to trade it. So let's move on. Gold. Gold, high, low, lower, high, lower low is what I'm looking for. I really like the idea of 2450 to 2400, trying to scoop up some more positioning on gold. I will take that spot price and I'll probably add in some futures contracts. I'll add in some GLD exposure. Silver, same type of thing. We're back at the 200 moving average. A lot of good support around 26 if it gets back there. Otherwise, I'd really like to see silver do something like this at the 200 moving average, start to work its way back up, have a little pullback in here, and then have a bit of a bullish pattern. If we get a breakout to the upside, this is a big target for me. Long silver to like $36, and my other target is around 45. So silver is a pretty good trade for me. Overall, I've been bullish on it. It's been in profit. I'm sitting on some profit. I'm trying to make more money. I think we have higher levels to go, and to me, it's still a measured move. Bitcoin, we're at 93. I'm pretty happy with the analysis here. I called the symmetry level right around 108, and we pretty much hit it to the point, and then started to fade. So as far as profit taking, I did take some profit when we hit symmetry on BITO. I closed out some call options for profit. I'm sitting in a bunch of dollar cost average positions in IBIT, FBTC, and I put on some options with both as well. And then I'm also in MSTR and coin with some income trades, EETH. I need this to stay above $60 by the end of the year. This is only a couple weeks out, of course. So we'll see what happens. But I like Bitcoin after hitting symmetry. Now it's a game of where's the pullback. So I was looking at 90K to roughly 80K, and we have previous highs around 75. So between 90,000, that's kind of the more shallow pullback, and about 80 to 75K on a deeper pullback, maybe a small dollar cost average there or a decent, reasonable dollar cost average there. If we pull back to 80,000, that's going to be roughly a 30% pullback or so. And I know that a lot of Bitcoin traders over the years are now used to, oh man, Bitcoin can pull back 50, 60, 70%. It's true. Because we have it more securitized and maybe there's a bit more of the regulatory inflows and kind of bigger, safer money, like BlackRock and assets under management, financial advisors, and it's being added in. I mean, heck, if you got MicroStrategy getting added into the QQQ, whether people like it or not, you are investing in Bitcoin in some sliver. MicroStrategy is essentially a high volatility Bitcoin trade. And now that it's being added into the QQQ, I don't know if that's good or bad. That either adds a bunch of volatility to the index, or it helps it with the extra gains. It maybe juices the QQQ a little bit more. I have no idea. But it's going to be interesting to see how that plays out. So I still like, the levels here, 90K to 80K, looking to average in, and 75K being previous all-time high. So I'll watch that structure on Bitcoin. What else we have here? I went into some China plays, Argentina, waiting for a bigger pullback. I'd like to see like a 100 or a 144 area. So anything between this 100 and this 200 moving average, looking for some pullbacks there. China, I might be the only one that still has faith in China stocks going higher. I'm not. I mean, to me, it's a good opportunity with China in Q1 of next year, maybe offering some more insight with animal spirits. Are they going to continue to support the property market in China? Are they trying to raise animal spirits domestically? Are they wanting Western money with their ADRs, which is American Depository Receipts, which is how Western traders can invest in Chinese companies and do so through U.S. stock market, U.S. stock brokers. That's what I do. Through my positions here, I have some trades in Alibaba and Baidu. I did close out FXI and KWeb, but I have exposure with Alibaba, Baidu, and JD at this time. What else do we have to look at? Yeah, really, it's this. I'm watching the 10-year yield closely. It's doing the exact opposite of the Fed, which is really frustrating. The S&P, going into the holidays right now, we carved out a little bit of a gain today. Let's see what the day does to finish out. I would think that the market, if there's no major downside disruption, then because there's really no catalyst, like what news is coming out over the next 2 weeks that's going to make the market sell off? Probably nothing, right? Is there enough news to get us all the way to all-time highs? I don't know, because the Fed was really disruptive with the pricing there. And again, it wasn't the Fed's fault. I mean, Jerome Powell said what he said. He came out swinging with a lot of talk on inflation, a lot of talk in tariffs, and basically the Fed was hawkish. Like they have cut enough that they feel like they can be restrictive. They're not looking to cut anymore. And if they pause right now, let the market just kind of adjust and digest it, we'll see what that ends up being for price. But I would still like to think if I'm a bargain shopper on the indexes, I'd like to think we have a high, low, lower, high, lower, low. Find me a bar count. Okay. It gets a little bit tougher if we have a lot of this, a lot of indecision, because then you're wondering, well, does this roll over into a deeper correction where a 2-year market becomes more of a bear market? Okay. Or is this sideways that just leads to, okay, now we can justify going higher? I don't know. That's the question mark. But for right now, I think that it's going to be very challenging to get back to these highs without having some type of additional catalyst, I suppose. Or if we get to these highs, my concern is that we stretch these highs, but then we also have a deeper correction and it just becomes a little bit more violent at the tops and bottoms. And it throws traders for a bit of a loop. So that is my job to navigate this stuff in the markets, and that's why I'm live and talk through this with a lot of traders, and hopefully we figure it out. So, all right, everybody, I'll let you go for today, and hopefully, all have a great holiday season. I'll be back with a few more videos. You can just check them out anytime. But thanks for checking in. Thanks for tuning in. Happy holidays. See you soon. Thanks. Bye.